I'm Zainab Kufaishi. I am the head of Invesco for the Middle East and Africa business. Invesco is an independent global asset management company with about $1.4 trillion under management globally on behalf of our institutional and retail clients. I have been in asset management for nearly 20 years now, all in sort of independent asset management companies, and within Invesco for about 12 years, based in Dubai, covering the region. And I've loved to see it grow and flourish and thrive, and gone through so many different trends and changes over the last 12 years. Yeah, so just first of all, I'd love to speak about this report. This is the 10th annual Invesco Global Sovereign Asset Management Study. This is an annual study based on, this year, based on 139 face-to-face interviews with chief investment officers, portfolio managers, key decision makers, sovereign wealth funds, central banks, and public investors. And it really tracks investor behavior. So it's been fascinating to see some of the trends over the last decade. I think that, the interviews were really taking place in sort of Q1 of this year. So as you can imagine, quite an interesting backdrop for some of these interviews. So a lot of geopolitical uncertainty, obviously with the Russia-Ukraine war, rising interest rates, rising inflation. So lots of sort of trends and challenges that a lot of these massive investors are really grappling with. In terms of ESG, just to kind of address that question, this is one of the key themes that we've identified in that report. ESG has been a rising trend the world over, as you know, really starting in sort of Europe with a lot of public investors there, but also in Australasia and Canada. In the region here in the Middle East, we have seen that trend taking pace. I think we've seen some challenges that this region particularly faces in terms of, say, stranded assets and water scarcity and a lot of other climate-related issues. And so ESG and particularly climate has been at the forefront of a lot of these sovereign wealth funds and central banks. What we've identified this year actually was that 75% of the key institutions that we've interviewed have a formal ESG policy, which we probably didn't see 5 years ago. And so that's been very notable to witness. I think, there's, as with many investors and many participants in the industry, challenges around, say, data disclosure, transparency, standards, regulation, are all challenges that we all face. And I think hopefully it's on the right path. But so I think that's something that investors here in this region are particularly taking a close look at, and how they can influence change through what we've identified through impact investing. So really direct investing and sort of direct sort of assets, say in climate-related companies or such like. And so that's been very, very good to see, really taking a more impactful look and a direct look at ESG. So I think, like I said at the beginning, inflation has been identified as one of the key challenges, I think, going forward. And there's always going to be questions around whether it's going to be a transitory phenomenon or a structural phenomenon. In Q1, it'll be interesting to take the snapshot now, but in Q1, certainly that was the question. But it was definitely seen as a headwind, and I think one of the key trends that we've seen on the back of that is a pause on major asset allocation shifts as a result, because of this more transient macro environment, with the exception of real assets. So we have seen a trend towards alternative investing, real assets, for really the past decade, and that's really was driven by sort of a low interest rate environment. Now we've seen that trend continue in investing in things like private equity and real estate and infrastructure, but probably the purpose of those assets in the portfolio has expanded to act more as an inflation hedge, as well as diversification and driver of returns. So that's been quite an interesting development in the use of private assets within most investors' portfolios. Interest rate hikes at the forefront of most investors' minds, especially the large ones. It's important to remember that a lot of these sovereign wealth funds and central banks and public pension funds here in the region are long-term investors. And so they've got long-term strategic asset allocation across their portfolio to make sure that they are well diversified. So, a rising interest rate environment has exposed some opportunities, say, in some fixed income assets, potentially going back with the rising yields. So that's probably seen a little bit of an uptick in sort of a few fixed income opportunities. But like I said, I think real assets, private equity in particular, has continued to rise. Yeah, fixed income is a challenging it's quite a challenging environment to be in fixed income because of rising rates and falling asset prices. So I think investors are being a lot more discerning about where they invest within the fixed income space. We have seen a pause on equities, and that's and again back to that kind of real asset shift, really trying to see if they can allocate towards more longer term allocations towards real assets. Yes, I think a lot of direct investments. Certainly, we've seen volatility in the equity markets, and that's a challenge that you get with sort of REITs and investments on publicly listed real estate, certainly. And this region in particular is a very sophisticated and long-standing investor in real estate. So we've seen probably about 20% of the interviewees have said that they will increase allocation to real estate, and a comparable number in infrastructure, which has been a rising trend as well. To answer your questions, it would mostly be direct on that side, but it's really real estate across the board. It's a very good question. I think cryptocurrencies has obviously been all the rage in the media and amongst investors' minds. We've seen obviously really quite substantial volatility, to say the least, in a lot of those cryptos. So I think a lot of these longer term investors, very sophisticated investors in a globally balanced portfolio, are looking at cryptocurrencies and digital assets, really looking at the value that they bring and also the position within the portfolio, but probably not investing directly into cryptos at this stage. But they are looking at the underlying technology behind cryptocurrencies. So really the blockchain technology, and really using that to invest more directly into some of those technologies, because there is a perception that will obviously pave the way for Web3 and obviously other technological advances. So that's really where they're focusing most of their efforts and focus at the moment, rather than cryptocurrencies. But it is a wait and see on those. And I think there is obviously, as central banks are grappling with sort of launching their own cryptocurrencies, that will further legitimize those digital assets. So central banks globally, I think, have been thinking about launching their own digital currencies for some time. This region is probably no exception. However, in comparison to sort of sovereign wealth funds allocations to digital assets and cryptocurrencies, this is more of a wait and see game. And I think many of the investors that we interviewed did identify that should central banks launch their own digital currencies, that will be a threat to the existing cryptocurrencies that we've seen, because it would be much more legitimized. I think in terms of sort of central bank reserves generally, that we have seen tremendous growth in central bank reserves over the last sort of 12 or 15 years. And I think certainly with the geopolitical climate that we've faced and potentially things like the weaponization of reserves with the Russian central bank assets being frozen, many investors have been thinking about the currency allocations within their portfolios. And I think that the position of the US dollar as a reserve currency is probably unabated. It certainly continues to be very strong. But I think currencies like the renminbi, for example, are being looked at in a closer way, and we have seen increased shifts and increased allocations to currencies like the renminbi. Yeah, so another theme that we've identified in the report was around scale. A lot of these sovereigns and sort of central bank portfolios and reserve portfolios have gotten so much larger. And so they're really using more external asset management companies and external resources to scale up in the artificial intelligence and data science field. And so that's really seen as a way to really scale up alpha generation, to make sure that they have access to the latest technologies. They are able to use different data sources to uncover alpha. And so that's been an interesting way, and many have actually sort of hired their own data scientists and built out their internal teams, for example, in that space.